Hello, everybody, and thank you for joining our live show today. We have a special feature. I know I usually come live on Wednesdays, but we just have so much to talk about this week with auto loans. Auto loans, we've had so many questions right now, especially with, how do I lower my car payment? What if I can't make my payments right now? So that's what we're talking about this week. That's why we're doing this special Friday show for you. There are just so many questions out there. We're going to get them answered. So the first thing I want to say is if you missed my show on Wednesday, definitely go back. Whether you are facing unemployment, you've been furloughed because of COVID-19, maybe you're just in financial you're just struggling financially right now and you need some extra funds to allocate somewhere else. Last week, we talked about how you can skip or defer that car payment, and a lot of lenders have options for you. So I'm going to just throw that link in to the comment bar so that you can go back and watch that show when you have some time. So that's in there now. Just a reminder that if you do have questions during the show, you can put them in the comment bar. I will do my best to answer them live for you. And if I don't get to them, I will always answer them after the show or just do a little video for you and send it for you to answer that question. So today we are talking about refinancing your auto loans and when should you refinance? When is it a good time? Some things to consider. What if you don't have good credit? When is a good time to refinance your car? That's what we're talking about today. And there's a lot to consider before you just jump in and start refinancing. The good news is there's no minimum amount of time you have to wait to refi. So if you bought your car yesterday, you don't feel like you had the best, financing that you could have had, the interest rate was not what you expected, you can just go ahead and do some exploring and look around and see if you can get a better interest rate. That is a possibility. So there are some things to consider before you even really look at refinancing, though, and that's what we're going to dive into right now. So the first thing, and if you have this, if it's relative to you, you probably already know, but there are times when if you're refinancing, what that basically does is it takes a new loan out to pay off your old loan and then you pay towards the new loan, right? Ideally, you'd get a better deal on that new loan, whether it's a different loan term to lessen your payments or a lower interest rate, which also lessens your payments. So there are, though, in some cases when you're doing that, prepayment penalties. So you take out a new loan to pay off your old loan and they'll charge you a fee to pay off that old loan. Why? Because they make money when you pay the full length of your loan because you're going to pay all the interest from that loan. So there are about 70% of the states in the United States that allow these types of penalties. So usually they're on short-term loans under 48 months or so. But it's always just best to check and be sure that you're not in that situation. To do that, just check out your loan paperwork, read the fine print, and make sure that there's not a prepayment penalty. If there is a prepayment penalty, weigh your options, right? So if the prepayment penalty is fairly minor and your refinance will make that worth it in the next couple of months, in the next few car payments, that's something to consider, right? If it's a ton of money and it's just not worth it right now and you just can't do it, then wait. So that's one thing to consider. Check to make sure so that you're aware if you have a prepayment penalty to pay off your current loan if you want to refinance. Another thing to consider is other fees that are involved when you refinance a car. There are just a couple and they usually don't add up to very much, but it's important to know about them, right? So one of those is when you're transferring the lien holder and another is to re-register the car. So usually they add up to about $100. In the grand scheme of things, if you're refinancing and you're getting a good deal, that's worth it. You might save that in the next month. So something to consider, though, just so that you're aware of all of the fees that you might be facing. The next thing to consider when refinancing is your current loan term. What exactly are you looking to do to refinance? Do you want a lower interest rate or a lower payment? And they kind of go hand in hand, but it's something to consider because if you can lower your interest rate, your monthly payment will probably be reduced. That said, there are also times when a lower interest rate is not really an option for you, whether it be because of your credit score or some other factors that are relevant. But you can also extend the loan term. What's important to remember about extending the loan term is that while you're paying over more time, so your payments will probably be less month to month, but you're going to be paying more interest over the life of the loan. In theory, though, you could, if you're facing some struggles and you might not be eligible for a lower interest rate, you could refinance with a longer loan term, reduce that payment for now while you need to, and then refinance later when your credit score is higher or you have a higher income or you're just more stable financially. Another thing to consider before you even start talking to a lender about refinancing is ask yourself, just check and make sure, are you upside down on the car? You probably can't refi. When we talk about being upside down on something, that means when you owe more than what the actual value is. So if you owe $18,000 on a car that's only worth $16,000, it's going to be harder for somebody to want to refinance that car for you. So just check and make sure, see if you're upside down. So let's say you went through all those things. There's just a few things to consider before you even dive in. And now you know you're ready to refinance. You would like to do that. Here's what you should do. The first thing you do before you even call a lender, look online, before you do any of that, is get your free credit report. We talk about free credit reports a lot. We do it every single week almost. But there's a reason for that. And that's because your credit report is just so vital when you're looking at opening a new line of credit or making a big purchase or even a small purchase like a cell phone. Your credit report is very important. And right now there can be a lot of inaccuracies because of just all the craziness that's going on. Scamming is more active. There's more active hackers out there. There's just a lot going on in this COVID-19 world that we're living in. And it's just important to look at your credit report. So I'm going to, like I usually do, put in the link to get your free credit report. Right now, you can get a free credit report from the 3 major credit bureaus every week through April 2021. So normally they only allow one a year. Right now they're doing a free one every week so that you can make sure that there aren't any inaccuracies. That change shows you that you should be looking at your credit report at least a couple times a year right now. If they're letting you look at it for free once a week, look at it maybe once a month, just to make sure. So some inaccuracies to look for are accounts that don't belong to you, closed accounts that you've closed but still look like they're open on your credit report, duplicate accounts, and inaccurate payment history. So if it shows that you missed a payment that you didn't miss, make sure you get that corrected. And outdated balances or credit limit info. And the reason those are so important is because if you have a lower balance than what it's showing on your credit report, your credit score could go up because your debt has been reduced. And then the same goes for credit limit. A higher credit limit likely lowers your credit utilization, which plays a big part in your credit score. So if you do find some errors, I'm just going to throw a link in the comment bar so that you can understand how to dispute those. This article tells you exactly how to do it. So pull your credit report, and if you do find an error, go ahead and just read that article. It shows you exactly for each credit bureau. It gives you a templated letter you can send to get that corrected. Getting those inaccuracies corrected, chances are, will boost your credit score. So credit score, credit reports, and interest rates all go hand in hand. That's why it's so important to check your credit report to make sure that your credit score is accurate and to get the best interest rate that you possibly can. The biggest thing with interest rates, and there are two warnings I want to give when we're talking about interest rates for refinancing, is that don't be fooled by refinancing advertising, and don't be fooled by low credit lenders and dealerships, because if their interest rate is low, chances are they'll try to make it up somewhere else by extending your loan term and making up that interest over the life of the loan. So just a couple things to consider. Why? Because there are so many advertisements out there right now for 0% financing, 0% financing. The reality of it is no one really gets that 0% financing. Your credit score has to be perfect for you to get that 0% financing. Your credit history, your credit reports, they're giving 0%. Lenders are giving 0% financing to people who have no mark on their credit score, and that's not most of us. If you have a 300 to 500 credit score, the average interest rate is about 14 to 19%, which is pretty high. And if you have a 500 to 600 credit score, your average rate is between 12 and 16%. But that's just to give you an idea of, if you're not getting that 0%, don't feel bad about it, because it's very rare for that to happen. The biggest thing you can do when you're looking at interest rates and refinancing is just make sure that you're getting a better deal from your current loan to the new loan. That's the point of refinancing. If you didn't get a better deal, you wouldn't do it, right? So that's what we're doing when we're talking about interest rates. Just making sure you get a better deal, and don't be discouraged if you don't get 0%. The other thing we wanted to talk about, especially right now, is how your income plays into a refi. And why we want to talk about that is because I've been asked the question of, does unemployment count as income? And in this case, it does not, because it's temporary. Especially right now, the extra $600 per week that the CARES Act is providing does expire. So that's why lenders aren't looking at your unemployment benefits as income. That said, your unemployment benefits can be used as a down payment, which will lower the loan amount and then consequently your monthly payment. So while you can't claim your unemployment benefits as income because it's temporary, you can use those extra funds if you do have extra, and if your goal is to minimize your car payment right now or reduce that, you can use that extra cash as a down payment in your refi to pay down your loan and finance less than what you currently owe, which will reduce your payment. So those are the big ones. Check your credit report, because your credit score is important for interest rates, and then unemployment and how you can use that to the best of your ability for income. The other thing we wanted to talk about is, so you've got all these things to consider, you've done your part, now it's time to go look at where you're going to refi. The biggest advice is just to shop around, because you might have multiple inquiries on your credit report, but as long as they're all within the same 14-day period, they only affect your credit score as one hard pull. They will still be on your credit report so that you can see how many different agencies have pulled your credit, so that you can keep track of that, but it will only negatively affect your credit score as one hard pull, as long as it's within the same 14-day period. So when you're doing that, that's important to remember. It's good to shop around. Make sure you're asking if they are going to do a hard pull or a soft pull on your credit, because they affect your credit score differently. But as long as they're within the same 14-day period, they'll only affect your credit as one hard pull. That's huge. Then lastly, where we want to tell you to go, and this is a really good advice, is credit union. Why? Because credit unions are locally governed, so they're not subject to the same regulations as national banks, and they usually guarantee a 1% decrease of your interest rate. So I was actually just talking to someone who fell victim to what most people do when they're buying a used car at a dealership, and you get a really high interest rate and you get sucked into some gap insurance or a service agreement or warranties and things like that. Make sure that if this sounds like you, make sure that you understand your loan and then go in and talk to a credit union and see what they can do for you. In this person's situation who I was talking to, it was 3 months after the original purchase of the car, and he already went in and refinanced, and he saved $200 a month on his loan. And the other thing you can do is, if you didn't get a great deal, or maybe you were sucked in to some of those extra features like gap insurance or those service warranties, see if you can purchase those same things through your credit union that you're refinancing with. They actually allow you to do that. And this person did that, and they saved a ton of money. It was cheaper and it was better gap insurance than he had originally through the dealership, and ended up saving $200 a month. So make sure that you do that when you're looking and seeing exactly how your loan is figured out. See if you can save some money. If you did purchase a service agreement or an extra warranty that you actually realize you don't need, you can cancel it and they'll give you a refund for the rest of that portion that you haven't used. So those are super important things to think about too. So credit unions are a great place to go. Chances are they'll beat the bigger banks in interest rates and things like that. So that pretty much sums it up today for what we're talking about for refinancing an auto loan. If you have questions, please don't hesitate to reach out. We are going to continue talking about auto loans next week. It's a big topic. It's relevant to so many people. So if you do have questions that haven't been answered yet today, feel free to shoot me a message, send me a short video, and I can answer. I can reply in video. So if you guys have questions, please let us know. You can call our credit coaches if you're in a sticky situation with your finances and you just need to consolidate your debt payments or have your finances analyzed, create a new budget. Our coaches do that for free. So go to creditanddebt.org if you're looking for free credit or debt coaching. Thank you so much for tuning in today on our special Friday feature. And we will see you next week on Wednesday at 12:30 Pacific for our Ask Abby show. Take care.